Have you ever heard of someone trying to deduct their pet as a business expense? Or how about claiming that daily coffee run is necessary for maintaining their rental property? Stay tuned as we explore some of the most outrageous tax mistakes and errors, and more importantly, how you can avoid falling into these common traps. Welcome to the Ask Ralph Show, where we delve deep into the world of finance with a touch of humor and charm. I'm your host, Ralph Estep Jr., and today we'll be discussing something that affects all of us, but can leave us puzzled and even frustrated: taxes.
Welcome to the Ask Ralph podcast, where listening to an experienced financial professional can help you make sense of confusing questions, current headlines, and industry trends about taxes, small business, financial decision-making, investment strategies, and even the art of proper budgeting, as Ralph makes the complex simple by sharing his real-world knowledge with all things financial. Now here's your host, Ralph Estep Jr.
All right, folks, it's that time of year again when numbers become our best allies or worst enemies. Tax season. Whether you're an individual filing your personal taxes or a business owner navigating through complex deductions, one thing is certain: mistakes happen. However, some mistakes are so peculiar they become legendary in the realm of tax history. Today on Ask Ralph, we'll be sharing stories from accountants who have witnessed it all firsthand. Rest assured, these are not your typical mathematical blunders. Let's begin with what I call the pet project. Believe it or not, there was once an individual who attempted to claim their dog as a dependent. Now, unless Fido has magically learned how to complete W-9 forms, if he has indeed acquired this skill set, please contact me immediately because I have questions. Pets are generally not considered dependents for tax purposes. Next up is the phantom philanthropist. This generous soul claimed charitable contributions so substantial that they surpassed his actual income. While generosity should be applauded, inflating donations not only raises suspicions but could also result in penalties or even an audit. It might even put you in jail. And who could forget the creative horror conundrum? One taxpayer tried to deduct the entire cost of their new sports car as a business expense, simply because they used it to meet a client one time. As tempting as it may be, folks, personal vehicles used occasionally for work do not qualify for full deductions unless they are exclusively used for business purposes. These stories may bring smiles to our faces, but each one carries an important lesson on staying within the boundaries established by tax laws. Now let's transition from these extraordinary tales to practical advice. Here are some tips for avoiding common tax errors. First and foremost, and I can't stress this enough, maintain meticulous records. Receipts are your strongest allies when tax season arrives. They serve as irrefutable evidence that supports your claims. And remember, organization is not just about tidiness, it's also about accuracy. Next tip, do not overestimate your home office deduction. Yes, working from home has its advantages, but claiming half of your house when you only utilize one small room will attract attention from the IRS faster than those free samples at Costco. Another crucial point, report all income, no matter how insignificant. This includes income from side jobs, freelance work, and yes, even those few dollars earned by selling grandma's antique lamp online. Lastly, seek professional advice if needed, especially when dealing with complex situations, such as owning multiple properties or running businesses abroad and so forth. Remember, folks, honest mistakes can occur. However, taking preventive measures will save you headaches in the future. So here's a few quick measures you can take to avoid errors when filing your returns. Number one, keep accurate records. As we already discussed, maintain organized and detailed records of all your income, expenses, and deductions. This includes keeping track of receipts, invoices, and any other relevant documents. Accurate records will ensure that you have the necessary information to support your claims and prevent errors. Number two, double check your math. Simple math errors can lead to costly mistakes on your tax return. Before submitting your return, review all calculations carefully to ensure accuracy. Consider using tax software or online calculators to minimize the risk of mathematical errors. Number three, review your information. Take the time to review all personal information entered on your tax return, such as names, Social Security numbers, and addresses. Even a small typo in these details can cause delays or complications with processing your return. And as I talked about on a podcast a week or so ago, even if you're paying someone to do your returns, it's important that you review them. And these are the kind of things you should be reviewing them for. Number 4, understand deductions and credits. Educate yourself about eligible deductions and credits that apply to your situation. This will help you maximize potential savings while avoiding claiming improper deductions or credits that could trigger an audit or penalties. And lastly, number 5, seek professional assistance if needed. Listen, if you have a complex financial situation or are unsure about certain aspects of filing taxes, consider seeking assistance from a qualified tax professional, such as a public accountant or enrolled agent. They can provide guidance tailored to your specific circumstances and help minimize the risk of errors. Remember, taking these measures will not only help you avoid mistakes, but also ensure that you file an accurate tax return in compliance with applicable laws and regulations. Now let's hear from you, our listeners. We got an email from Jim who accidentally claimed his honeymoon as a travel expense. Jim, my friend, love, unfortunately, is not always deductible. And we have an email question from Brent. Ralph, what happens if I accidentally file twice? Well, dear listener, take a deep breath and contact the IRS immediately and explain the situation. Usually, duplicate filings can be resolved without too much trouble as long as honesty remains the guiding principle throughout the process. Keep those emails coming, folks. We love hearing your insights, dilemmas, solutions. Together, we can form a community that learns and grows into a financial savvy bunch. Alrighty, team, before we wrap up, just a reminder to visit www.askralphpodcast.com to leave a review or send us your feedback, ideas, or questions. We always welcome your input here at the Ask Ralph Show, where curiosity meets expertise meets fun times galore. In conclusion, my fellow taxpayers, while tales or bizarre write-offs and erroneous entries may provide entertainment value, our true goal should always remain clear: accurate filing practices to avoid unnecessary stress from audits or penalties. So whether you tackle your taxes on your own or enlist the help of a seasoned professional, now, of course, that's what I recommend, remember that knowledge is power, and preparation is key to success in the realm of taxation. Thank you for listening. God bless you, and stay financially savvy. Until next time.
Thank you for joining us on the Ask Ralph podcast. And with a simple click to subscribe, we'll invite you back to our next episode. And remember, financial issues don't have to be complicated. Just ask Ralph. The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media, Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.